I'd just like to start with a fun question. What are you excited about on the Lightning front? Elise, we'll start with you.
So I've been talking a lot lately about the ability to denominate payment channels, Lightning channels, in dollars. So, and I spent a bit of time on that, I think, with BTC Sessions on one of his Friday panels, and I'll just repeat that here. But one of the things that Taproot sort of set us on a path for was dollar-denominated payment channels on the Lightning Network. And the way that that could happen in the nearest term, there's several mechanisms for doing this, but the way that that's likely to happen in the nearest term is for a payment channel to be defined by a DLC, a discrete log contract, such that the channel is Bitcoin collateralized, of course, but the balance of the channel is defined by the exchange rate introduced by an oracle via DLC. So all that means is that within a certain range of volatility, that channel can be balanced and rebalanced so that one side of the channel is holding the value in that channel in USD or in pesos, for instance. And why that's so impactful, I think especially in the short or midterm, is that much of the argument around why Bitcoin is not useful in an emerging market is that folks in emerging markets don't have the capacity to withstand Bitcoin's current volatility. And we have to acknowledge that that's true. That makes a lot of sense. If a circular economy doesn't exist yet in completeness within that own individual's local market, then of course volatility can be difficult to manage. But being able to exist in the Bitcoin ecosystem via the Lightning Network and have channels denominated in your local currency sort of removes that friction point, or at least to a degree removes that friction point, and then allows people in emerging markets to get the value of the technology, so the instant permissionless and nearly free transaction capability without having to tolerate the risk of volatility. And so what I imagine that can look like is that folks would hold perhaps a savings account in Bitcoin while holding a checking account or the money that they intend to spend within a month's time or a week's time in fiat denominated stable channels. And so while there's just a ton, like Lynn said at the top of the show, going on in the Lightning space, and some of the most exciting innovation in Bitcoin and in cryptocurrency more broadly is happening on Bitcoin's Lightning network layer. But stable channels specifically, I think, have such a breadth of relevance that Stillmark is trying to spend a lot of time right there.
Yeah, that's really fascinating. I haven't looked into that much. And it reminds me, though, on kind of your first explanation of it that I've heard, of what El Salvador is doing, where, they guarantee that merchants who are being, required by law to accept Bitcoin don't have to take the Bitcoin at all. It's instantly transferred or into their native currency, or I guess dollars, right? So it's similar, but actually, in the protocol itself, it doesn't require a government fund to facilitate that exchange. Is that kind of what's going on?
I think that's right. And then I also think when we're talking about emerging markets onboarding to Bitcoin via Lightning Network, then it's important, I think, to realize the significance of Lightning Network kind of removing the dynamic of what remittances are or what they used to be, because we can just transact globally without needing to go through a fiat to fiat exchange. And the reason, one of the reasons why that's so compelling is because in emerging markets, the friction and cost of remittance is so burdensome that there's a real acute need here and an immediate value that can be provided through the Lightning Network, whether that be through Bitcoin on the Lightning Network or the Lightning Network just used almost as a rail for a fiat payment or exchange. And so what's been most exciting for me in the past 12 months is to see this almost feedback loop or a lucky convergence of events between what's happening at the protocol level and then what's happening in terms of adoption. And so as we continue to see, a sort of overlap of these things, I think that favors an acceleration of Bitcoin's growth.
Yeah, absolutely. We're seeing, additional improvements to the Lightning Network coming out now that Taproot is here. It will enable like any prev outs, and then L2, which is much less data intensive, simpler implementation of Lightning channels. So it's great to see that protocol continue to improve as well, and we'll only see more and more of that over the years as Bitcoin's protocol will start to kind of ossify. Lightning's ossification is way out in the future and can continue to be improved. Do you think that Bitcoin or that Lightning will end up being something like akin to a partner to the base layer, so that like in the future, improvements and applications will be built on top of something that's sort of analogous to TCP/IP? Some people call it LNP/BP as a sort of partnered base layer for the transfer of wealth across the internet.
I think that makes sense. That would be my sort of null hypothesis as to what happens. But what's important, for us to do as venture investors in the space is to be, not to lead here. So we're observing what developers find is the best path towards scaling and to the introduction of new utility. And so our real work is to watch what's happening on the protocol roadmap, both at Bitcoin base layer and sidechains on Lightning Network, and then to sort of start to imagine what that means for app developers or infrastructure developers whose work will be impacted by the unlocking of this sort of new utility. And so, while I would suspect that the way these layers develop will be similar to what we saw to, the maturation of the internet, we're also open to something else emerging here. And I am really sort of, most grateful for the level of engineering talent that exists in this space and the rigor of their work in considering the trade-offs of their work and of what's done at these various layers. And so, and I think that it's probably one of the few things that are most key in differentiating Bitcoin from any of the other protocols and cryptocurrencies.
Yeah, Lynn, you were an engineer for quite some time, and I wonder, when you approach analyzing Lightning from that engineering mind, do you see this sort of developing in the same way that the internet has developed as a stack of protocols, and who knows what happens from the base of LNP/BP?
Definitely, from an engineering perspective, I think that's what excites me, is seeing the modular development, that you can have different groups working on very different things, and we don't have to see exactly which area is going to succeed because we know we have a really strong foundation underneath. And rather than trying to kind of change things on the fly in the base layer, we see that the base layer is pretty ossified, and then we go forward with these other layers and see what works. And so, for example, the idea of stable channels certainly appeals to me. I think I heard that first. You mentioned that on Preston's podcast, and I thought that was a really neat kind of example. And for me, it's the overall network effect that we're seeing kind of blossom on the Lightning Network. And so, for example, a lot of the DeFi protocols or things like that, they can grow very quickly. Whereas the way that Lightning works is it's all about liquidity. And so, in addition to the development work being done, that takes just long periods of time to build those channels and to build that liquidity. And so, now we seem to be seeing that over the past year or so, it's really reaching a critical mass in terms of usability. I see a lot of people saying how they used to try to send payments, they'd often fail, but now they're able to reliably send these moderately large payments through the network. And so it's achieving that kind of like sufficient liquidity, density, along with all sorts of new tools that have been coming out. And then I'm interested to see what's happening with these layer 3 technologies, things like Impervious or Sphinx, where now increasingly Lightning is not necessarily just for transmitting value, but also information. And so it's interesting because from the beginning, even in Nakamoto's own writing, the idea of Bitcoin it was kind of a purely monetary good. And so many other historical commodity monies, basically it was something with utility, but they didn't require a monetary premium. Whereas Bitcoin is interesting because, from the beginning, say Satoshi described it as like a commodity that is not really useful for many things, with the exception that it can be sent over a transmission media. It can be sent over a network. And so for a while, that's how Bitcoin's operated, as this pure utility money, where the utility is the ability to send permissionless payments or to self-custody your own assets. But now it's actually fascinating that we saw a pure 100% monetary good actually start to develop these non-monetary utilities. They basically the ability to transmit information in that same decentralized way. And so those are still very new technologies, and so we'll see how that develops. But I think that the fact that the overall space is kind of reaching this critical mass is what excites me, and that basically Lightning and some of these other sort of second layers or third layer solutions, they're basically where Bitcoin was in like 2012, 2013, where they're not on most people's radar. They're still early stages, but I think that they're really promising. And I think looking back, say 5 years from now, I think there's going to be a lot that happens in this whole ecosystem.